For decades, we've all thought of Dubai as this glittering fortress of capital, as this sun-drenched, tax-free paradise where the global elite could park their money and just watch it grow, totally separate from all the chaos in the world. But now there's a regional war right on its doorstep, and that whole image is being tested like never before. So that brings us to the big question we're digging into today. Is Dubai's economic strength a real fortress, or is it all just a fragile facade that's about to crack? And listen to the official message coming right from the very top. This is a statement of absolute confidence from Dubai's ruler, Sheikh Mohammed. The narrative they're pushing is crystal clear. Hey, this city wasn't just built for the sunny days. We engineered it to be a fortress. Okay, but that confident narrative is running headfirst into a pretty brutal new reality. Because for the first time, the conflict isn't over there somewhere. It's right there. And that shatters what might be its single most important asset, its reputation for being safe. And that is the tension, the real heart of what we're looking at today. All right, so here's how we're going to break it all down. First up, we'll look at Dubai's gilded promise, what made it so successful. Then, the shock to the system. After that, we're going to dive into two very different stories, the official narrative versus the market narrative. And finally, we'll put it all together to really understand what it means to be a city under pressure. Okay, let's dive right in. Section 1, Dubai's gilded promise. This incredible city didn't just pop up out of the desert by accident. No, this was a very deliberate, very calculated, decades-long plan to become the ultimate safe haven for the world's wealth.
How'd they pull it off? So, what's the secret sauce? Well, it's a pretty powerful mix. First, and this is the big one, basically no taxes. We're talking zero on personal income, zero on capital gains, zero on inheritance. I mean, that alone brought in over 81,000 millionaires. Then you create these special economic zones, like the Dubai International Finance Center, the DIFC, where the richest families are managing, get this, over $1 trillion in assets. And the final piece of the puzzle? A golden visa program. You buy property, you get residency. Boom. You've just created the perfect magnet for global money.
And that brings us to our next section, the shock to the system. Because, you see, that whole model, that whole gilded promise, it all hinges on one single, absolutely critical idea, that the sanctuary is, actually safe. And then, suddenly, that assumption was just gone, shattered. I mean, we are talking about direct hits on some of the city's most famous, most iconic spots. An explosion at the Fairmount Hotel on the Palm, a fire at the legendary Burj Al Arab from drone debris. The airport itself was damaged by a missile. Even the US consulate was targeted. This wasn't some far-off threat anymore. This was war showing up right in the middle of the fortress. So how do you even respond to something like that? Well, that takes us to part 3, the official narrative. And the government's message was fast, it was simple, and it was strong. Dubai is unbreakable. Our economy was built for this. And they didn't just come out with words. No, they came out armed with data. And the headline number was this, a projected GDP growth of 4.5% for 2026. Now you gotta understand, this wasn't just some boring economic forecast. This was basically a weaponized statistic. They dropped it right in the middle of the conflict as a direct counterpunch to all the fear and talk of economic collapse. And to back that claim up, they pointed to something else, new businesses. Think about it. Even with everything going on in March 2026, almost 3,000 new companies signed up with the Dubai Chamber of Commerce. The message from the government couldn't be clearer. See, capital isn't running away. It's actually doubling down. And here's the really crucial part. This growth isn't just from the usual suspects, like real estate. The tech sector, it's projected to grow by 12%. That makes it the fastest growing piece of the whole economy. And this is being held up as proof positive that their big, long-term plan to diversify away from oil is paying off right when they need it the most. Yeah, and this chart just lays it all out, doesn't it? If you look at those new companies from March, sure, real estate and business services are leading the pack. But look at all the others. Trading, construction, social services. They're all showing strong numbers too. This shows the foundation is really broad. It's not just leaning on one single thing. This quote from the former chief economist at the DIFC, it just nails the whole official argument. He says the economic model was literally designed to handle this kind of shock. And then he drops this bombshell stat. Oil is less than 1% of Dubai's GDP. Think about that. This is not your typical Gulf oil state. This is a modern, diversified, post-oil economy that was built to last. That is the fortress argument, right there.
But is that the whole story? That's the question, right? And it brings us to the flip side, the market narrative. Are the investors, are the people with skin in the game actually buying what the government is selling? Because when you start to dig just a little bit deeper, well, a very different picture starts to take shape, one where confidence is starting to crack.
And that's really well, it's not the $1,000,000 question, it's the $1,000,000,000,000 question, isn't it? Are the folks with real money on the line actually convinced by this story of unbreakable resilience? And right here, this is where you see the two stories just crash into each other. On one hand, you have the official line. A UAE official downplays it, calls it a simple recalibration of risk. Okay. But then you hear what's happening on the ground, reports of wealthy investors making active plans to get their money out to places like Singapore and Hong Kong. It's like we're talking about two completely different realities.
And this disruption, it's not just an idea, it's real. You have to remember, Dubai's entire brand is built on being this perfectly smooth global hub. So when more than 23,000 flights get canceled in just a couple of weeks, that's a direct attack on the very core of their business model. You can't just call that a recalibration. That's a system that is under some serious, serious strain. And this is where the story gets really human, you know? We're not just talking about abstract numbers on a screen anymore, we're talking about real people. Indian entrepreneurs scrambling to move their life savings to Singapore. A wealth manager in Singapore whose phone is ringing off the hook with calls from 13 different clients in the UAE, all asking about an exit plan. We're talking about companies literally evacuating thousands of their employees. And of course, the demand for private jets to get out of there, it's gone through the roof. These aren't spreadsheets. These are real signs of a crisis in confidence. Okay, so where does all of this leave us? Well, that brings us to our final section, a city under pressure. We've got these two totally conflicting stories, so how do we make sense of it all? The truth seems to be somewhere in the middle. Yes, it's a fortress, but it's a fortress that is absolutely 100% under siege. And there's actually a term for what experts think is happening here. They're calling it a forced cooling. And this is a really important idea to grasp. The danger here isn't that the whole system is going to collapse like it did in 2008. No, the risk is something different. It's a liquidity crunch. Basically, cash and investment just freeze up because the region feels unstable for too long. And when you start looking sector by sector, you can really see this forced cooling happening. Look at aviation and tourism. The risk level is extreme. Of course it is, with all those flight cancellations. Real estate, high. Foreign investors are hitting pause, and there's a ton of property just sitting there. The overall big picture, macroeconomic risk, they're calling it medium, and the big threat is what they call precautionary capital flight, people moving money just in case. What this really tells us is that the damage isn't spread out evenly. It's hitting the very things that made Dubai's open for business reputation so strong. But, and this is a really, really big but, context is everything. And this chart just shows you why Dubai's whole strategy is so important. Even with all this pressure, that projected 4.5% growth, it absolutely blows its oil-dependent neighbors out of the water. Look at Saudi Arabia at 2.1%. Kuwait is barely even growing at all. So is Dubai being tested? For sure. But its diversified economy is still proving to be way more resilient than anyone else in the neighborhood. So at the end of the day, we're left with this. Dubai's incredible skyscrapers, they're built on steel and glass, sure. But its economy? That's built on something a lot more fragile. Confidence. The numbers, they show the economic fortress is holding up. For now. But the core promise of Dubai was never just about getting rich. It was about being safe while you did it. And in a world where that feeling of safety has been shattered, the real trillion-dollar question is this. Is being resilient enough to rebuild the trust that's been lost?